welcome along to the Property Academy podcast by Opus Partners. I'm your host, Steve McKnight.
I'm Andrew Nicol.
And today's show, we're talking about how long will it take for property prices to recover? Because all around New Zealand, or most of New Zealand, property prices have taken a real tumble since the peak of the market at about, late 2021, early 2022. And how long could it take for prices to get back to that level? Now, Andrew, how much are property prices down around the country? Where do you want to look?
Well, some areas are quite drastically down. So Auckland's down about 20%, right? What's it down?
Currently about 19.7%. They've bounced back about 4% since they bottomed out.
I can see your map goes to about a third. Where's down about a third?
Well, places like Wairoa District, which is in the Hawke's Bay, just above Napier and Hastings, but below Gisborne, property prices are down about 32%, and they still have not bounced back at all, right? So they are still to bottom out there. But it's a bit of a different story once you get to a place like Grey District, which is on the west coast, and property prices are up 17-ish%.
That's mad.
Well above the peak, right? So they are above their peak, which was in April 2022. So they went down a bit. Now they're right up. Now, just be a bit careful with the West Coast because it's such a small area. Property prices bounce around all day, every day. But let's look at some of the major cities, Andrew.
Go to Wellington. What's Wellington down at the moment? So down 20%. Lower Hutt is down 24% from memory, 26.4%.
Yep, that's since the peak of the market. Now, in places like Lower Hutt, property prices have bottomed out and bounced back 5%. In Wellington City, they're up 9%. But it raises that really interesting question of, okay, they've started bouncing back a bit, but how long is it going to take to recover? Now, I specifically wanted to just start by looking at our largest city in Auckland. And I've modeled out that if you bought $1 million property, at the peak of the market, which was November 2021, your house value would have gone down about 23%. That assumes that your house value perfectly follows the market, which doesn't always happen, but that's a different story. So your house value went down 23%. It's bounced back a bit. Today, your house value would be about $803,000, right? So how long does it take for your house to get back up to $1 million? Well, I've modeled this out statistically, and the answer is about 4 years. That's the most probable case. It takes 4 years for your house to get back to $1 million. But the markets don't always work perfectly. So over the last 30-ish years, the median increase in value of property prices in Auckland per year is about 7.7%, but sometimes it's more, sometimes it's less. So if we have less house price growth, if we have a bad run of house price growth, it could take you up to 8 years for your property to bounce back. So you've got a 75% chance that your property value has bounced back in 8 or fewer years. If we get a really good run of property prices, let's say like top 25%, you've got a 25% chance that your house value bounces back in just 2 years. So if we have some really good house price growth, could be 2 years. If we have some really bad house price growth, it could take you 8 years. The average is 4 years.
So when you say 2 years, what sort of growth would you have to have per year to get that?
It'd be above 10% per year.
Right.
You'd have to say, because then you'd have to have compounding about 10 to 12% per year. Okay. Now, my sense is we're probably not going to see that. I think 4 years is probably more likely. That is the average. But I'm just trying to give you the ranges, because sometimes if you think just about the average, okay, 4 years, not everyone is going to have their house value bounce back in 4 years. So I just want to give you that range. 4's probable, but it could be quite easily between 2 and 8 years for your property value to bounce back. But that is only in Auckland, right? But not everybody lives in Auckland. So I've run the numbers for some smaller regions, because property prices tend to be a bit more volatile in the smaller cities. And so what does it look like, say, if we were talking about Lower Hutt or Hamilton, Andrew?
So for Lower Hutt, it ranges, we're using those same models, from 3 to 15 years, with the probable being 7 years.
And the reason it takes longer for Lower Hutt property prices to bounce back, we're saying 7 years, it's twofold. First of all, Lower Hutt property prices have fallen further, right? They're 26% down, whereas Auckland was about 20% down. But also, historically, property prices haven't gone up as fast in Lower Hutt compared to as they have in Auckland. Talk to us about Hamilton. Property prices there have only fallen 13.4%.
Yeah, this is an interesting one. So you're optimistic, or your shorter end of the horizon is 2 years again, same as Auckland, but your pessimistic is 12 years. So anywhere between 2 and 12 years, the probable still 4 years. How does that work, Ed?
Well, the reason is that Hamilton property prices, again, they fell about, or they're about 13.4% down compared to their absolute peak. Property prices in Hamilton, again, they have not increased as fast as in Auckland. So the median increase in value on any given year in Hamilton is about 5 to 6%, whereas in Auckland it's above 7%. So that's why it's going to take the same amount of time for Hamilton property prices to go up, but by a smaller amount. But what's important to note as well is not everywhere has fallen. You know, if you own a property in the far north district, property prices are only down 0.6% compared to the peak of the market. In my old stomping ground in South Taranaki, and I love to talk about them, property prices only down 0.5% again compared to the peak of the market. So you're going to have no time at all to recover. In fact, you're probably thinking, oh, well, my property price is what it already was at the peak. And I should have mentioned actually at the start that this number crunching is really important, because if you were like me, where you bought a property at the absolute peak of the market, you've seen the value of that property go down, you've seen interest rates go up, and you're probably thinking, oh, well, how long is it going to take for my property to recover in value? Can someone please just help answer this question? And I like to give you these ranges just so you have some of those numbers to play with. Now, you might be asking as well, you know, there's a lot of nerdy number crunching in this, right? Like we've created some cool Monte Carlo models to try and calculate these probabilities. Are they totally devoid from reality? Is this just fancy number crunching, or could this actually happen? And so I wanted to jump into the numbers in the Wellington region and just show that, yeah, it absolutely could. I told you before that it could take 7 years on average for Lower Hutt property prices to recover. And if I take you back to the GFC, property prices peaked in 2008 in the Wellington region. They only went down 8%. And in this case, you know, with the most recent downturn, they fell up to 40% in some cases. So they fell much more this time. But even back in the GFC, it took 8 years for the Wellington region to recover and then take off. So when I tell you that Lower Hutt, it could take 7 years, that is totally realistic, because for the whole of the Wellington region, it took 8 years last time for property prices to go from the peak to falling and then eventually recovering before taking off. So 7 to 8 years certainly could happen.
And have you got the same data for Auckland?
Oh, I haven't prepared the same data for Auckland, but it was shorter. I think it was about 4 to 5 years. I remember running some numbers quite a number of years ago showing that property prices in some of the major cities like Auckland, they tend to recover much faster from an economic downturn.
So I think the market went up by about 50% from the bottom of the market to the 5 years following. So given that it dropped about 10% last time, might have been less than that. It probably didn't take very long at all.
Well, I suppose that comes back to what we were saying. You know, we've kind of estimating that Auckland could be back at its peak within 4 years. What I do want to say, though, just coming back to Wellington, is, yeah, it took 8 years to recover. But just remember as well, is if you'd invested for 15 years, you still would have made a lot of money. Now, you guys on YouTube will be seeing this graph. For anybody listening on the podcast, I'll explain it. But it took 8 years for property prices to recover. But in the following 6 years, property prices then went up about 160%. They've come back quite a lot. But if you bought in 2008, 15 years later, you still would have doubled your money. Now, you had to go through 8 years of a flat market to get that boom, and then you've just recently had a property price decline. But if you just look at that 15-year period from 2008 to 2023 roughly, yeah, you would have basically doubled your money. So if you'd bought a house for $500,000, maybe it's worth $1 million today. You've made 500K. Now that's really cool, but you do sometimes need to go through that flat market to make money over the long run. So if you are like me and some of the other investors who I know we've worked with, you'd have bought at the peak of the market. You obviously know now, looking back, okay, if I was to do it again, I wouldn't do that again. I wouldn't have chosen that point to invest. But you've invested when you did. You made the decision now based on the information you had at the time. You may need to go through a bit of a flat and falling market for a couple of years. At Lower Hutt, it might be 7 years. At Auckland, it might be 4. There are some ranges to this. But if we hold on for the long term, we know we are likely to make money and good money over the long term. And that's what we need to keep in mind as well.
I think the hard part is when people are putting in contributions and their property prices are going down, or they've come down, or they're flat, it's a lot harder than when you're putting in money and you're seeing those prices go up, but you do have to look at the long term and do have to hold on and weather the storm.
Cool. So depending on where you're investing, it could take anywhere from 4 years, or on the lower side, if we took a really optimistic scenario, anywhere from 2 years, potentially up to 15 years for your house price to recover. It's more likely to be somewhere between 4 to 7 years, depending on where you are, but it could be longer, it could be shorter. Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. Really does help us get the message out to more people. And hey, if you're listening to the audio version of this, you want to see the graphs we're talking about and the maps we're talking about, just Google Opus Partners YouTube. It'll be the first thing that comes up. And if you are watching on YouTube, make sure you hit the subscribe button. We are so proud. We have officially become the #1 most subscribed to property YouTube in New Zealand. Thanks for listening to the Property Academy podcast. I'm your host, Steve McKnight.
And I'm Andrew Nicol.
We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time,